Okay. What we see here is a serious overextension of the US dollar. I kind of get the feeling that that's is going to get a pullback. Um, how far of a pullback? I don't think it's going to be much. The US dollar strength story is still valid and still there. There is some, as we can see here, the dollar yen is out of, and obviously the Kiwi a little bit as well, is out of whack in the formation of the trend for the last sort of month. It's been sideways. Aussie for a couple of weeks, with the Kiwi certainly in there as well. Whereas the euro and the pound is being pushed to its extremities along with the Canadian. So what's driving that is the Canadian is obviously being driven by oil price. We've got the pound that's been caught up with sort of the sniffles from the euro flu. And the euros, everybody knows about that story by now. Um, and we've got the Greeks also now starting to have a bit of a say on what's going on in terms of they've got elections on the 26th, I think it is, the 25th or 26th of January. And the party that's looking likely to win is the party that's saying we're not going to honour the debt that we've got. And that's putting the wind up all the investors over in Europe land, combining with that with the ECB trying to obviously battle the deflation. So that then is also why we're seeing the yen getting a little stronger or holding its ground against the US dollar in terms of safe haven flows. The New Zealand dollar has also got a bit of that, and so has the Aussie dollar. So um, that's the sort of general story. There was a bit of a reaction on Friday night from the US dollar jobs. The jobs data came out stronger as stronger than expected, but the hourly wages, so being paid, fell. So what they're actually paying for wages is being reduced, and that was seen as a sign that the Fed won't need to raise rates in June. So the US dollar got came off the boil a bit. Um, Looking forward for the next couple of weeks, couple of months, once the Greek election's out of the way, seeing the ECB also on the January the 22nd, they've got their announcement. Will they do quantitative easing or not? There's some calls that the ECB will go to a dollar or parity. Then now that's quite possible. It was there not long ago, 10 years ago. Back here in 03, 04, it was at parity and got below parity. Um, Quite possible for it to get there. Personally, I don't think it'll do that um, anytime soon. The call is by the end of 2016, so there's 2 years. That gives them enough time to change their call anyway. But it was Goldman Sachs and JP Morgan, and they're two of the biggest, so you can't ignore what they're talking about. Um, in the meantime, they've got the ECB on the 22nd. I think that when that announced that they will buy that a little bit, um, and you'll get a bit of a bounce, maybe back up to these levels here or even higher on the ECB, maybe into this area here around 26, possibly even to 29 or 30, although that's maybe a bit of a stretch, but certainly into this area here, I could see it happening around the ECB news. Um, it's a bit of a sell the rumor, buy the fact, and then once it's out again, it's the US dollar domination will continue. That story is not going to finish until they start raising rates. The huge influx of funds back into the US is pushing that US dollar higher, and that will continue. There'll be, obviously, it's not one directional. You will get pullbacks, and that's what's happening now. Is that the US dollar is getting a little weak, just to come off the boil a bit. I saw a headline this morning saying that the open interest on the US dollar is the largest it's been in something like 18 years. And that to me says that something's got to change soon. As that everybody's bullish, then that tends to, when everybody's got the same direction is it's not far from the end of its run. Not the overall run, but it will have a pullback. So, oil story will also continue. It's hovering around the $50 mark. Probably get to $40 before winter. That's our winter. During the US summer, when everybody goes for long drives and in the summer break, the consumption tends to go up, and so oil price does as well. Perhaps that'll be the catalyst for it to get back to 60, 70, who knows, but in the meantime it's still quite weak. So that's the sort of overall picture that we've got going there, or that's the way I see it. The trend is your friend, that old cliche. You're just looking for short positions every time you can. But there's opportunities abound in the pullbacks as well. I did trade the hourly on this one last week on Friday. Came in here on Friday and got out Saturday morning. Just run it for 50 pips, risking 20 pips. So that's there are opportunities in the pullback. Hindsight says I should have hung on, but I was quite happy taking 1% out of the market on a Friday afternoon. But you really want to be going with the trend. On the majority, you'll be looking for short positions, i.e. being long US dollar. Until that trend is broken, i.e. we start making higher highs, then you've got to go with that. Okay. So let's go to this one. I've been stalking for a long time. Lowest it's ever been, ever since the float in '73. This is the lowest rate that the Aussie Kiwi cross has ever been. Put on 100 pips on on Friday. But gee, it's really struggling. All-time lows. We are getting diversions here though, but it's a game person to be buying it. But that's what I'm trying to do. Where all-time lows, we shall see. Anyway, certainly not. May look at that for a small amount, risking. You're going to be risking about 120 pips or so, 150 pips. Targeting up here is about 260, so it's about not even 1 to 1, is it? Well, sorry, it's 1 to 1.5, which is, that's alright. It's no huge result, but yeah, tricky. Anyway, I'm stalking that one. I want to get it, but it's proving difficult. So going to the CAD yen, we'll go to your emails now. Short at retest a triangle. What's that? That's the daily. The safe haven flows, which is what's driving the yen over the last couple of weeks, thanks to the Greeks. Safe haven flows should continue for another week or so, I would suggest. Obviously, if the Greeks that party does get in, then that safe haven flow will accelerate. I don't know what the likelihood of that is happening, of them getting in. At this stage, I think it's still 50-50. But even 50-50 is enough to scare the shit out of the market. And if they do get in, then that will continue, because the risk is, you see a lot of articles about the Germans saying half of Germany wants Greece in and the other half don't. The half that want them in is because they fear contagion, that if Greek bail out and say, thumb their nose to the debt, then other Spanish, Portugal, Ireland could potentially do the same, and so that contagion would break the European Union up in terms of the economic bloc, which is not what Germany exporters and German economy wants, or would want. They benefit hugely from being in the European Union, and that as it is, if the the Deutschmark, if the European Union broke out, the Deutschmark is calculated to be about a 28% premium to the euro, so that'd have a huge effect on their export industry of motor cars and drugs. Those who want Greeks to be out are the ones who say, well, we're sick of paying for them to do fuck all, which is what they do, sitting around the beach, and dodging taxes. So, valid argument both sides, but I think that yeah, we'll have to wait and see how the Greek election happens. So the safe haven flows should kind of continue until at least until a couple of days after the election, so the end of this month. Maybe if not, or if they certainly what's it called, the Syriaz party wins, then you could expect even more safe haven flows. So being short CAD in terms of being short oil is a fair call. Being long yen in times of safe haven flow is also a fair call. So I kind of like that idea, like that setup, and from a fundamental point of view. And so what you're looking at here is traced to the 38.2. It's going from that is, I think it's a pretty weak look at things. I know it's gone broken through this trend line, and you see this ring high here, and it's really, and it's retraced to the fib. I wouldn't use that as an argument to personally. Yes, it's underneath this May high. If that's a reset or retest or resist. Sorry, I'm going blind. Yeah, I like what you're trying to do. As this high here is something that I'd be more concerned about. But you're looking at that one, aren't you? You know, the other thing is we are quite overdone on the momentum, and we're finding a support level here. What I would prefer to do, whilst I can't fault you for I think it's a little weak, but what I would prefer to personally to do is see a better cycle underneath this, and a retest of that sort of closed above that high. It's let's call it 101, which is a nice round number, it's sort of 101.96. And what I'd like to see is momentum back in above 50 here, so do some work around here, and then look for a shorting opportunity. You are getting lower highs, but to me this is still sort of working its way off, and there might be some sort of buying going on here and a bit of fluff sort of before we can get short. When the fundamentals get going, though, your momentum indicator doesn't really help. As you can see here, when the Bank of Japan announced stimulus, you overbought, oversold signals are not going to help you at all. There's not that much fundamentals news out there. It's just the prices falling on the commodity markets. Iron ore's tanking, oil prices tanking, and there's some safe havens flow from the European doldrums. I think it's a weak trade. I don't mind it. I like the concept. I think that's a little weak in that support level here that it's bounced off. Bounced here, sort of stopped on it on Friday. To me, it was also at the same time as you're overdone. Says, well, let's sort of wait and see. If it does run, then I'm not in it. Then happy days. Well, not happy days, but not too concerned. Prefer to let it go than be caught up in something that's get caught up in something that's just going to potentially go sideways. I looked at the CAD yen, but thought momentum was too low at 27%. Yeah, it's currently at 28, but running at 28.5. But yeah, I think that 27 on Friday. Yeah, that's my concern as well. However, if you want to do it, I'm not going to stop you, because you got, that's what your main focus is, and it's possibly valid. Yeah. Okay. So, going on to Euro Pound. Certainly, was this the monthly is down. The Euro dollar is obviously very bearish. The pound to me is the only reason it's being caught up or being sold off is because of the Europeans. Other than that, they were doing all right. Their economy's going well, and there's no reason for them to be sort of priced at where they're at. But you can't ignore the fact that they do a lot of business with Europe, and if Europe's struggling, then they will sort of naturally struggle as well. So on that basis, you've got to be looking at short positions on the Euro Pound, although it did go sideways there for some time, 3 or 4 months. Looking for shorts is the ideal sort of setup. So my range trade would eventually got there. Yeah, fucking range trading. Okay, so here's your channel. First cycle below the 50, soft resistance. Yeah, I've broken out of this trend line and retested it. Okay, which is also the 50 retracement of that move. Fair enough. It all looks reasonably good. Although, are we a little late trading? Wouldn't the ideal trade been under this one here after that test? Is that what you were looking at? Which is that's monthly. We've done that. Big support there. What's that? 77.50. Yeah, wouldn't have been in here the trade? Where's your entry you're looking at? What's your entry price? Entry level. 77.93. Yeah, down here. I mean, I suppose it's not too late, but if your risk reward is okay. But yeah, I would have thought it'd been in here. I'd be sort of potentially, now that it's run, is looking at something like this. Shorter time frame. And that might allow you to sort of run the risk of 77.50 getting out before it gets to that big support level which you've identified as 77, from these lows at 77.50. Yeah, if you're trading on the hourly, you're looking at risking 77.50 down here. But yeah, other than that, mate, I think that's all all stands pretty good. Yours, yeah. Certainly go all right if the ECB do not do any quantitative easing. That's unlikely. They will do something. Whether or not they do enough is the question. Yeah. Okay. My analysis on each depended on price action, as none of them are quite there yet. Okay. Swiss yen. Swiss yen, yeah, it's not quite there yet, but I've got a support level through here. You've got your Fibonacci 61.8 retracement. Not sure what this white line is. Provided we got the price action, this could be treated as either phase 2 back to the EMA, yeah, back to the 200 easily, yeah. Horizontal support, no obvious resistance. Fib retracement support, long time trend line. Was there? Okay, I'll have a look. From June 2012, hidden divergence. No. Not the way you've, if that's what this white line is, that's not hidden divergence. This is hidden divergence, which you've come from here. Yes. What you've signalled here is hidden divergence, yep. This, I don't know what that is. Oh, is that a head and shoulder pattern? Yeah, you could potentially argue that's a head and shoulder pattern. It's not the classic one, though. It hasn't come, should have come back and retested it, but that may be happening. Yeah, it's not a huge one, but it certainly could be classed as one. Yes. How would you allocate your risk if there's both a phase 2 and a phase 1 trade? Yeah, I would scale in, absolutely. I'd scale into the trade. So let's go and have a look at that June 2012. That's quite a lovely steep angle. Haven't quite got there yet though. So just coming back to the daily, yeah, it's quite a distance away from it on that. So I wouldn't say that trend line, but it's obviously, we're going along at the 200 EMA. Is offering support, as is this horizontal, which it's right on now, 1680. Yeah, there's clear, strong support there. I don't have enough history to go back and see if there's any long-term fibs there, but that's yeah, pretty clear to me as to being quite a support level, and it's flirting with it. We're also getting divergence here. Now, that bullish divergence, which you can see there, is, if you're wanting to be a buyer, is not a problem. Right? That's what you want to see. You're treating this as a phase 1 from there to there. You do have hidden divergence, as you've pointed out. And you've got reversal divergence at the end of this move, which is also good. Whilst technically that looks good, we need to see buying, as you suggested. It's not there yet. We do have the divergence. We've got everything we need except for the price action. even if we do get the price action, I would be only doing half my normal risk, mainly because the fundamentals I don't sit with me being going against the fundamental of safe havens at the moment, and buying Swiss, selling yen fundamentally is upside down to my current position. Um, and so I wouldn't trade a full amount of risk on a technical setup that's against my fundamental view. I don't like the word the belief, because belief means you sort of shut down every other opportunity to um, know what's out there, if you understand what I mean. Yeah. Belief is the death of intelligence. Okay, so my fundamental view is that this is should be going further south, and perhaps then it's only a phase 2 trade instead of a phase 1 trade. However, there's good support level there. So given a trade setup, if it does appear that there's buying coming into the market, I wouldn't go for the full 1% or full risk. I'd only do 0.5%, and then maybe add to scaling into it on a shorter time frame, just so I'm not in it and exposed to it for too long, if that makes sense. All right, Euro yen. So that's your Swiss yen. Cool. Euro yen, same thing, very similar as you'd expect. Yeah, just on that CAD yen, sorry, Swiss yen. When you're looking at that head and shoulder pattern, it'd be interesting to see where the 50 EMA is on that in terms of. Okay, I thought it might be if it came and retested the 50 EMA and that trend line, and maybe a horizontal like this. There's a higher one, I think, isn't there? Yeah. And you see selling at that point, then perhaps that's your opportunity. Yeah. We'll see. All right. Euro yen, yep, same. Okay. Euro Poland. If price actions support level, thought this pair could provide a good ring low, new phase 1 long opportunity. No hidden divergence. Okay, we don't need hidden divergence, but yeah, we can see a rather strong support resistance line there, or even a bit further up. Yeah, you might say there's one there, and there's one here, being that highs. Might be if we just sort of come in there, get a few more, 4.25, somewhere around there. Yeah, if this bar is a buyer bar, then you get another buyer bar, then that's all good. You don't need hidden divergence, but everything else is looking all right. Fundamentally, well, I don't know what the hell's going on in Poland. I have no idea, but you know, you'd have to think that they'd be sort of caught between a rock and a hard place, being stuck between Russia and Europe. And so things wouldn't be looking too rosy for them. So yeah, that's something to keep an eye on. I wouldn't trade that in the shorter time frames. I think the spread would be a little nasty. Plus, I think also shorter time frames, what was that, 26? You're talking about 70 pips. Plus, when you trade these kind of pairs, the shorter time frame bars look very difficult to trade. All these tails and stuff. So, um, good spot. As he says, just need to see 2 days of buying at least. So this day needs to be a buy bar, then followed up by another buy bar on Tuesday, maybe a trade Wednesday. Pound Aussie. Alright, so I've done that one. Pound Aussie. Everybody reckons we're going to be lowering rates 0.5% in this year. I disagree. I disagree with that. With the Aussie dollar down as it is, that's effectively. I think it's for every cent, it's a quarter basis point rate cut effectively, and we've fallen from $1.10 to 81, and may even go through 80. If we do get through 80, it's not a big if, it's a high possibility. Then I definitely won't be a rate cut this year. If we get back up to 95, then there possibly could be a rate cut. But sitting around 80, I would say there's a very low chance of a rate cut this year, because it's already, having a lower dollar is effective of that. So the Aussie dollar I see is sort of fart-assing around a bit, or being driven by the US. The pound, I'm just trying to get where the fundamentals are going on these two. The pound, again, I'd be buying the pound over the Aussie because of the trade weighted terms of trade, and commodity prices are still being pummeled, and the Aussie therefore should remain weak to sideways, whereas the pound should be strong to sideways. Therefore, I want to be looking to buy this. And it's certainly oversold, sitting there at 10. There is a trend line you've identified. It hasn't quite got there yet. 81.40 as a support line. Don't know. You can certainly see the Fibonacci there. 81.40. This horizontal line, I'm not so certain about. Yeah, I mean, you'd have to go across there somewhere. And this one doesn't sort of help us, but it's around there. Yep. Mind you, you're doing a phase one trade, trend continuation, because you've got this cycle. You don't need a strong support line. It's better if you have one, but you do need a support line of sorts. So 84, 84.50 could well be that. Well, there you go. 84.55. But there's stronger supports down here at 83.50. Yeah. So everything's there except for price action. And fundamentally, I agree with the trade. I see a decent phase one that could happen if price reacts and the shorter term trend line image provided. Alright, Turkish lira. Turkish lira, if price action concurs, this could potentially be a phase one. Yep, pair offers a score of 10 out of 11 with higher highs. Cool. Price above both EMAs, support of 50, RSI, hidden divergence, no obvious resistance, momentum, hidden divergence. You mentioned Class C being this low to that low. Yep, it's fair enough. And certainly you've got some good cyclical action here, and we just need to see buying price action. So it might be a few days away, but yeah, good pickup. Again, need 2 days of buying. Certainly getting that at this stage of the, 2 hours or 3 hours into, not even 3 hours, half an hour into the day. Windows Photo Viewer, what's your problem? Why aren't you loading up? Okay, so let's. I've seen a couple of promising phase 2 trades, like the euro dollar. You're steering away from phase 2 trading and looking for positions of greater value. Good. Yeah. So things like the Euro Poland, instead of buying the euro dollar and doing a phase 2 trade, you could be buying this and doing a phase 1 trade. That's a far stronger trading with the trend than it is trading against the trend. I'm glad you realise that and trade accordingly. That's good. Euro yen and Swiss yen, I think, might struggle. Dollar lira certainly is something that you'd, again, trading with the trend. So it's all good. Right, CAD Swiss. You anything? I might just piss off. Alright, CAD Swiss weekly certainly is. We looked at this before Christmas, didn't we? Can you look at this one before Christmas? I remember this 3 fibs in the cluster. Yeah, long term, just completed phase 2 long inside. I wouldn't call that a channel, but you certainly got a resistance level there. Strong resistance and fib and beginning of phase 1 short. You were looking at it, but it's only just now setting up. Okay, cool. CAD Swiss daily. That doesn't look like what you've got, I don't think. Oh yeah, maybe. Certainly on those fib clusters. Bit of a head and shoulder pattern going there. High, higher, high, lower, high. Certainly found huge resistance in this area here. It's what's called 86, 87 zone. Or maybe 86 to 86.50. CAD Swiss. Short oil. Long Swiss. Swiss is safe haven. Not as big a safe haven as yen. So that's why I don't want the Swiss yen, but the CAD Swiss. Yeah, shorting this fundamentally makes sense. Targeting there. Yeah, that's a reasonable target. You've got quite a level there. And looking at closing in on it, certainly bearish on Friday after a high test. You've got divergence there. At the start of a new phase 1, that's okay. Momentum's in the 50s, so you've got plenty of room to go to the downside. Bearish divergence, fib from last touch of trend line. 86.50, yeah, tagged it nicely. Triple top, 86.50, hidden divergence, slightly, okay. Yeah, it's all good, mate. And what's looking at doing today? It's not much. Interesting would be freaking Axie Trader. Seriously. You think? No. I don't think. have to check another broker, but I doubt that that's the high. So you're going to be around 86.60 stop, entry around 85. So what's it, about 80 pips, 120 pips, something like that. Risk of pips 138. Okay, good one. Yeah, I like the analysis, and fundamentally it's working too. You know, some people would say it's just fud arsing about, but as you identified, that's fud arsing about, and for a reason, because of that resistance. Hmm. All good. Axie is the what? Axie is the only one showing that spike. Yeah. All right. Well, we might fix that in the next couple of months. Okay, so that's all from the emails this week, or sorry, Sunday and this morning. I've got a couple from Friday and Thursday that I'll just quickly go through now. Dollar yen. What did you do? You said you bought this on the 4-hour bar. That's the daily. From that low there. Why didn't you go from that one? Got this trend line. Go from that one. And okay, so the concern I've got here is if this is you're saying it's cycling along this trend line, right? It's not cycling along the 20 or that trend line properly, because this move here should have made a higher high. We can see that, okay, that cycle there, it's nice, and if you're saying it's cycled along the 20, well then, or that trend line, either one, then it should have gone up here. You know, I would argue that it's cycling anyway, that this here is a signal of failure of the trend, of the momentum. All right. So have been hesitant on buying it. I mean, I bought the Kiwi yen late in 2014. But it's got the same action, right? Slightly higher high, but we bought the Kiwi yen in here. I bought it on the 4-hour, other guys bought it on the daily, but that's, you're getting higher highs, and that was a nice test of the 50. Going to the dollar yen, well, that's a nice test of the 50 as well, and so you could have been buying it here, but it's failed to do that, and now we're, you've got this sort of price action happening here. That would have made me go, no, I don't want to trade this. Not until I beat this price here do I want to get involved in trading this. Does that make sense? I mean, some people bought it in here. Again, until it breaks that, I wouldn't have got involved until the smaller time frames until in here, until it does that. Now, if it breaks these, I might get involved in the shorter time frame before it breaks that. But this price action here, and okay, it was over the Christmas period, but it still should have made higher highs. I mean, you look at the euro and the pound over Christmas, they kept shitting themselves. So why didn't the yen keep rallying? Well, it was that safe haven flow. So that would have made me go, well, I'm not interested. So you've got to remember what we're looking at, and looking for that momentum still kicking along, even when you're trading the 4-hour. Okay. Right. Then we've got pound Swiss. Well, this is very similar to euro pound. Oh, looks like you got a trade on. in there, stop there, target there at the 1.618. Horizontal support, higher highs, higher lows. Okay, above the moving averages, finding support. All right, $1.53. Okay, yep. Bullish price action. Okay, no resistance in the way of fib retracement support. Okay, and you got in at 53.91. Euro Swiss $1.50. 1.49. Okay, you'd be paying a fair bit of. Any swap on that? No. Or you're not in the trade yet. You were just waiting. Okay, so pound Swiss, same as the euro pound, just upside down. Bit messy. Don't know about that spike, if that's actually real. I'd go and check with another broker. Yeah, look, everything's there. The trade, I don't know why it's still pending on yours. You should be in it. You should have gone in on this day here. I presume you're pending because you're waiting for that buying. Oh no, you would have gone in on Friday then. When did you send this to me? Friday morning. Okay. I mean, you could have gone in on this day here. It's a ring low there. It's not a huge amount of buying, but it's still a ring low. You've gone in with 0.5% on this day and then add to it on that day. So that's all good. Analysis is sound. Pound yen. Just with the safe haven flowing, I'm not that keen on the yen until that bullshit's out of the way. I'd rather stay out of the yen. 180. There's that high there. Is what 181. I think that'd be your support level, just under where you got in, or looking to get in. Did you get in? No, you wouldn't have got in. Good. Cancel the trade. There is divergence. Oh, no divergence actually. There's no divergence because that's convergence. Yeah. I'd walk away from the trade now. Forget about it. I mean, your analysis technically it was okay. Fundamentally, I kind of disagree with selling the yen at the moment. Yeah. So cancel that, please. Yeah. Otherwise, that's all. I mean, your analysis is sound. I just fundamentally I disagree with it. And now that it's gone bearish, let's get out of it. All right. This one. Look, this trend line here, I think, is one of those ones that you're just making it up to suit your trade. Okay. This lower one, yeah, that's good. And as we know, it's not there yet. But this one here is, what's the significance of that low, other than it's in the trend, downtrend. And you've just managed to link it to that low, which is again, what's the significance of that? It was bugger all, just so you can get that, right? So I'd throw that out, and you can't say that you have trend line support. Okay, so no to that one. Horizontal support of $1.17. If that's off those there, $16.99. Yeah, that's fair enough. Other than that, that's all good. And as we discussed earlier about this, there's certainly reversal divergence, hidden divergence as well. If you look at it from this low here to that low where we're looking at getting in, certainly a hidden divergence there. But also, as we mentioned, we just need to see buying. Again, fundamentally, I kind of disagree with this trade, but technically it's okay. Therefore, I'd only do a small amount of risk on it. Right, yeah. Yeah. So just be careful with trend lines. You can't just shove them into suit the trade. That's doesn't make any sense to me, that trend line. Otherwise, it was all good. Right, and finally, Andrew has shared this with me, and I can forward it on to you all. Um, what he's what he's mentioned in here is that the support and resistance levels. Now, pivots, they come off, these support and resistance lines are built from pivots. Pivots are effectively a Fibonacci number away from the the pivot line is not exactly, you can go and research it, but it's based off the high and low of the previous period. And then you get your R1, which is resistance, 2 and 3 are the Fibonacci levels away from that pivot line. And what Andrew suggests is that these pivot lines tend to be uncannily on the mark as to where he's putting his horizontal levels. And I don't have a problem with that. You know, as Fibonacci will, as I've said to you many times, does build a lot of horizontal levels. The market moves off that. You know, down here we can see this is a 10-minute chart with a 4-hour pivot, and you can see how prices trades to those pivot lines. You know, the S1, R2 seems to be going for, what's this? This is support. What's that? Support 2, or support 3. Yellow bang. Hey, stop that. Anyway, it's, I don't. I will forward it on to you guys just for your own reference. The point I want to make with this is it's good to have this kind of information. There's nothing wrong with having this kind of information. I would just not rely on it 100%. If it adds to your trade ID, that's great. Pivot lines can be very helpful in finding entry points and or potentially putting your stop losses, hiding your stop losses behind pivot lines, and also obviously targets. So in daily pivots, I don't know about 4-hour pivot with 10-minute chart, I wouldn't bother about that, but certainly you'd be having your daily and weekly pivots on there. For those of you trading daily and 4 hours, you can have a look at the 4-hour chart with the daily pivots on it. That's not a problem. And you could be looking at those as your support and resistance lines. And I don't have a problem with that. You know, I wouldn't rely on this solely and say, okay, well, I'm just going to trade off the pivots. You can if you want, but just not with our account. But this kind of information is kind of handy to have if you know how to use it to your advantage. But sometimes you get so much information and so much data out there, and you go, well, what the hell am I trying to do? And how can I take advantage of this? You know, to me, having too much technical data on your chart means, well, where the hell's price going? If you got all these freaking wonderful lines all over your chart, you can't see can't see for the price action. So it's good to have. You know, certainly as Andrew suggested, you know, he uses it to verify his support and resistance lines, and that's fair enough. I will say one other thing though on that is MetaTrader. In terms of where are your pivots in here, they're not. You'll need to go and find a pivot. And that's probably simply something as, you know, going to MT4 pivot indicator download, something like that. In your own time, thank you. Something like that. pivot points. Yeah, anyway, you can go to MQL5. You might go in there, you might go to MetaTrader website itself, and get the indicator to load into MetaTrader 4, so you've got the pivots in there. If you've got eSignal, you don't need to do that because eSignal's got the pivot indicator in it. Okay. Anyway, it's certainly an interesting tool, and I'll share that with you on my email, so you've all got it. Okay, and thank you, Andrew, for sharing that with us. That's cool. Right, that's us for the day, guys. Welcome to 2015. There's going to be an interesting year. From prop trading perspective and from trading economic point of view, there will be some changes coming in the first half of this year, maybe even in the first quarter. With the prop trading, you'll be getting new accounts. Doesn't mean that you're going to walk away with, if you've had losses on your account, they don't get wiped. They will be carried over, but you will have new accounts. And I'll let you guys give you plenty of warning when that's happening. Other than that, it's the carry on as usual. Dear Watson, be down in Sydney at the end of January for some more courses, and we'll be obviously doing boot camps and webinars as per usual. So next webinar is on Wednesday. As I said, if I don't have any emails, I will go through all the currency pairs as we sort of have looked at. In addition, our new recommended brokerage, David, that was in January newsletter. Capital Index is now live and kicking. Yes, you can enroll via this link. Yeah, you can. You can go to capitalindex.com.au and get an account if you want. Is this to replace Axie? Yes, it is. You can keep your own Axie account if you want. I will be migrating all the prop accounts to Capital Index at some point in the next 3 months. And so your prop account with AxieTrader will be null and void at some point in the future. As I said, within the next 3 months. And you will be using Capital Index. It's this MetaTrader 4 platform, so there's nothing different to what you're experienced. So it'll be pretty simple. There'll be some slight changes, but they're just sort of more back-end things that you don't really need to worry about. But yes, Capital Index is the preferred broker moving forward, and all our prop accounts will be migrated to them at some point in the very near future. It's just a matter of me doing 2 weeks of data entry. Deep joy. Anyway, that's my problem, not yours. I shall talk to you again on Wednesday, guys. Good luck.